Well, good morning, everyone. Good afternoon, good evening. Welcome to Traders Around the World. Welcome to your Into the Open session here with me to trade this market morning. I hope folks are doing very, very well. Let's get right into it. But first, give me a good to go in the chat and let me know that all is good on the AV side for you. So it looks like things are good. Well, hey there, everyone. It's nice to see so many folks here already, ready and rearing to go. Now, just before we get any further, we've had a big move over the last couple of days. Okay, almost a 4% move up from the lows a couple of days ago to the highs yesterday on the NASDAQ. It is uncommon to have another big move after such a big move. It is more common to have indecision. So, the first message that I want to send you is we may be in a chop fest type day with indecision. And let's get right into it. So I'll of course share the charts and the insights with you as we move through this. All right, folks, let's go. Everything that I do and say here is for education and insight purposes only. It's not meant as advice. I'm not a registered financial advisor or representative. You must consult yours before making any trading decisions. Trading involves risk, not just reward. Risk of loss. Trade with money you can wholly afford to lose. When I trade, it's always in line with my risk trading plan, which is unique to me and might not be suitable to you. Consult your registered financial advisor and get a risk trading plan. Now, when I discuss past trades taken, do live trades in front of you, come up with plans and projections for future potential trades, whether with respect to a live cash account, demo account, or prop trading account. It's all done for education and insight purposes only. It's not meant as advice. And finally, if I poll you in the chat and I give you an average response back to that poll, the sentiment there is not necessarily indicative of the sentiment of the entire group, just those responding. I don't audit the chat, so do take that stuff as anecdotal. All right, folks, let's get right into it. So I think the first thing that I want to do here is just bring up the big chart with the structures on it here. Let's get right into it. So what you can see on screen right now is a chart of the primary market, the S&P E-minis. It's not in control of the risk tape, if you will. Oil, the NASDAQ, rates, currencies are more so in control. So what we're dealing with in today's market is indecision on the S&P E-minis. They're currently up 0.06% vis-a-vis yesterday's close. So off the lows though, right? That's the important part. It's off the lows. Okay, so that's a good thing, off the lows. However, we still have not broken the canopy up over here, which is effectively 75.95 to 76.05. That's the resistance structure that we're in. Now, we are well above the key support structure, which was the water line, which is that volume point of control, the set of histograms that you see running through the screen in gray. They all coalesce in and around the 75.55 area, going back to the beginning of May, and a variety of cutoffs there on after. So we're well above that water line. We've gotten out of danger. We've come back into the stabilization phase for the market move. We're above the top of the coil. So is this all consolidate to continue higher, or is this just a series of lower highs? Ready to come back down again? The answer to that question is obviously going to be, we're going to know it with hindsight, but we're not going to be able to know it right now. What we know right now is that the NASDAQ is in control of the tape, really, and it's not doing as well as the ES in terms of holding up. It is off its lows, that's for sure. So you can see the reversal tail off the lows. No, there's no question about that. And we're down about just about 0.4%, just shy of 0.4%. Now we're coming into the water line, like that water line 75.55 on the ES. The water line for the NQ, that volume point of control area is sitting at 29,820, which I'm sure you're tired of hearing me say, but it's the same number. And it's an area where if we see price go down below, we've got more downside risk in the market. And while we remain above, we don't have as much bullish fuel left after a 2-day move that's taken the NASDAQ from all the way down over here, the 28,900-ish area, all the way up to 30,000. That's a big move in 2 days, and that big move in 2 days is not likely going to repeat itself today. Furthermore, we don't have any catalysts that are programmed from a data standpoint coming out. Now, next week, earnings start to ramp up a little bit more. Of course, the geopolitical environment is always going to be, in control of the tape until the war is done, if you will. So at this stage, my expectation for the day is that the NASDAQ is going to have some struggles to really turn itself around and make a higher high and break the 30,000 barrier. It's going to attempt to do so, but we've got this cross current in terms of signaling. And I'm going to take you into the multi-time frame view of this in just a moment. But before I even go there, I want to mention that, hey, the NASDAQ is the underperformer today, and oil is giving us a small bounce, nothing big. So you can see a small indecision print on oil. It's up just shy of 0.5%. Oil up, NASDAQ down, S&P down. Okay. Now, also, we have to consider the environment with currencies and rates. The cleanest way to look at it and the simplest way to look at it, but very effective, is just look at Euro futures. So if you look at the Euro futures, what do we know? We know that there's a bearish reversal candle on the daily bar for the Euro futures. What does that mean? The Euro has come back down. The dollar is firming up. Now, when the dollar firms up, it tends to act as a headwind for equities. So we're dealing with a marketplace right now where oil is modestly positive, the euro is negative, gold and silver are in the red, not huge, less than 1%, but they're in the red. They're not likely going to trend. You've got the NASDAQ underperforming, right? It's down the 1/3% or so, 0.4%, while the S&P is pretty much unch at this moment in time. So underneath the hood, there's probably going to be, take from Peter to pay Paul. There's going to be lots of, mini rotation. But can we actually see trending at the index level? So that's the next question that needs to be answered to set the stage for, how to trade on the day. Now, again, I want to make sure that I beat everyone over the head, and especially myself, with the insight that after a couple of days of a very large move, just shy of 4% for the NASDAQ, it is unlikely that we're going to have a large move in today's trade. It's unlikely that we're going to have, a trend that lasts, more than half the session, or even that. Okay. It is more likely that we end up, setting up to, break out, for example, and trend higher and then get whack-a-mole back down. That is the definition of indecision. If that message is clear and you hear it and you've heard it from me, give me a lucky number 7 in the chat, because what that means is over trading today might not be the best idea. Trading, even at the average number of trades that a trader would take, respective to their own risk profile, might not be the best idea today. Right? Not every single day in the market is it going to be, great opportunity. There's more opportunity for, risks to emerge, during the trading day today. So we'll see. Let's see how it works out. And it's not about luck, Monty. It's really all about consistent practice. Let's see. But I get what you're saying. Let's see how it goes. All right, folks. Let's get moving from this chart where I'm just going to reiterate 29,820, important support floor. If that support floor gets breached, well, we can come back down to the lows of the session, but we're likely going to be magnetically attracted all the way back down to, the 29,500s to 650-ish area. That would be the territory that we could drop down to. So ultimately, that would be the downside risk. So from 820, just call it down to 520. About 300 points is what we can visibly see. While we're above 820, we can re-rise back up to the session highs on the NQ and try to tag the 30,000 and teens, 30,000 and 40, 50 point area. Getting up to the 30,000 and about 40-ish area would be the upside potential. So we're sitting at 29,850 roughly, and we're talking about adding a couple of hundred points to the upside, and there's a potential for 200 to 300 points for the downside. Okay, so fairly symmetric. It's a wide range. Let's go and take a look at the technicals and see what they say about this. We are rising at this moment in time as we are approaching the open. We still have less than a handful of minutes before the open. So let's go do this from a daily chart down to a 1-minute chart. So what you're looking at on the right-hand side of your screen is the NASDAQ E-minis on daily bars, and you can see that red triangle above price. What does that mean? Well, it's a tentative sell signal. And more importantly, we've been pushed back down into this 3-line channel. It's the MSR channel. So we've been pushed back down into that channel. The top of the channel is sitting at 920 effectively. Above 920, sure, we can try to rise. Rise to where? Well, we've got resistance on the 4-hour chart for the NQ right there at 975. So 920 to 975 is a trading range. We're at 850 right now. Okay, so we're at 850-ish right now, or 840-ish right now. And we are still in a sell signal state on a 4-hour chart. It's not converted over to a buy signal state. It's still in a sell signal state at this moment in time. And of course, the daily chart's got that tentative sell signal on top of the bar at this moment in time. So those are negatives. those negatives are things that are technically going to be harder to overturn. But of course, let's see how the market can respond at cash hours open in just a few minutes from now. Now, I've got resistance above price directly from the 4-hour chart sitting at around 29,870, 865. We know that getting above 920 opens the door for a little more upside, and then it's 975, and then it's 30,000 and about 40 points. So those are the markers on the way up. So I've got that straight. I just want to make sure that I've communicated it to you. Take a look at the signal on the 1-hour chart. We're still in a buy signal state on a 1-hour chart, where right now, underneath falling resistance and above rising support. The 1-hour chart is at the precipice of getting out of this, this kill zone, if you will, where you've got the top jaw coming down, bottom jaw coming up from underneath, and the top jaw is the speed lines effectively, and the bottom jaw is effectively down over here, the center of the MSR channel. So it's clamping down on price. It's a dangerous territory. It's easy to get whipsawed in a market like this, and on a day like today, just like you're saying in the chat, Emad, this is a market day where we're on the heels of a big move, more likely indecision, and the Nasdaq's weaker. We've got modest, upticks in oil, a firming up of the dollar, a little red on precious metals, and exactly, Suraj. And it's Friday on top of that, okay? And it's Friday on top of that. So now let's zoom it down to a 5-minute chart, and you can start to see a lot more chop. Right. So this is exactly what we were talking about. It's tried to get off the mat, tried to come back up, tried to get above, the 860, 870-ish area. So it can make it up to the 920 area, and it's failing to do so right now. So we've got a bearish reversal on the current bar. And if we take it down to a 1-minute chart, which is, of course, going to be a lot more noisy, it just explodes out the chop and shows you that, hey, we're in a very choppy situation right now. Be very careful. We had a big push-up bar at around 8:13 a.m. Eastern time, fairly big, about 100 points, I think, roughly. And we've been trading within that range ever since. What about the S&P E-minis? Well, let's go take a quick look-see at the S&P E-minis and get a sense of how that's set up. So you look at the daily chart. The daily chart is in a buy signal state. 4-hour chart is not yet in a buy signal state, but the sell signal's cooled off, blue dots. The hourly chart's in a buy signal state. The S&P actually has better signaling on the surface of price than the NASDAQ does. But the unfortunate or reality is the NASDAQ is in control of the tape. It's not necessarily the ES. Could it take over? Potentially. We'll have to observe that and see if that works out. Above 75.95, we've got some upside potential on the ES up to about 76.05. Okay, if we come down below 75.83, 75.85, risks grow to the downside. Below 75.75, risks grow exponentially to the downside. Okay, so let's leave that there. I'm just going to make this full screen here again and do that. Perfect. Let's see if that gets all fixed up. There we go. So we're now looking at a 1-minute chart of the ES on the left-hand side of your screen. It's got some good signaling, right? We have some good pre-trade conditioning from the SSS indicator. We've got a push up that's continuing right now. And I'm thinking about joining that for a little trade. But again, I want to be the person that comes to you and says, hey, over trading today is not necessarily the best idea because we can get a lot of whipsaws. But we're getting above the 75.95 line, and that would open the door for a little upside. And look, the Nasdaq's participating in this too, and we're seeing it rival the highs from about 8:13, 8:14 a.m. Eastern time. So I'm not in a trade as of yet. I'm seeing upside potential grow at this moment in time. The impulse to buy is fairly good. We're coming up to local resistance, and I'm going to see if I can jump into a little trade right now on the MNQ. So I'm doing a smaller size, and I want to see if we can poke up above here and continue with the initial momentum from the day. And if we end up seeing that bar go red, I'm not going to be sustaining the trade. But I do see momentum begetting momentum usually at the beginning of the day. But if it's not going to be able to hold itself up, I'm not going to participate. So you've got a big push up. You've poked up above the highs. It's whipped right back down to test the breakout area. If it comes all the way back down into the channel in the 820 area, we know that that's support. We know that that's the water line of importance. If that water line holds on a back test, that could become a tactic to trade long, or simply buying a rise through the high of the current 1 minute bar could also be a tactic. Both tactics are not ideal at this moment. I'm going to try one right now again. I want to see if we can push right up through the high of the session and get a little further on up. So it was profit positive slightly. Let's see if it can make a move up towards the 920 area. If it breaks the fast speed line, I'm not going to stay in this trade. Fast speed line was perforated, not broken. I'm still in the trade. The ES is indecisive, but it is holding its speed lines. So I'm willing to sustain the position at this moment in time. And at this stage, either it builds and is able to build some strength, or it can get whack-a-mole down very quickly. So those that are in longs right now want to be very, very careful. My finger's on the trigger to get the heck out of the position if the bar starts to reverse and breaks below the fast speed line, which is that cyan line right underneath price. But right now we're trying to build a little more strength. Momentum is there. It's the beginning of the day. Okay, so that's good. Let's see if this trade can take us up to 9. There we go. Okay, so there we go. So I'm going to take profit on that trade right now. So that was the goal, to get up to about the 920 area. I took the profit before I got to 920. Now above 920, what can we deal with in terms of where are we going? Well, we've done the work already in advance. So having the plan in advance makes a big difference. And what's the plan? Above 920, 925, there is room up to 975, which is resistance on the 4-hour chart. So we're at about 910, 912 right now. And I want to think carefully about the next entry, because we've already seen a little expansive move out of the gates. It's a little overbought. You can see that on the FFF tool, but this is actually a bullish indication. I want to back it up a time frame to the 5-minute time frame now, and just take a look at what the setup looks like on that 5-minute time frame. It is a little overcooked right now. At this stage, that would still be seen as bullish at this day part, this time of the day. So that's all still good. I'm going to back it up to the hourly chart, and we're seeing the FFF line try to get up into the uppermost quadrant of the 4-quadrant FFF channel. We are seeing the slow momentum line slope up, which is good. It's the backbone of the direction on the day effectively, but you can have a road that's clear in front of you. If the car doesn't have gas, it's not going anywhere. Right. So we're in the car. We found the keys. The car's on, but it's not in a spot right now where we've got enough fuel to have another trip like we did over the last couple of days. So I think where we're going is to go find the gas station, refuel, which means we can go higher, fill gas, refuel, and probably pull back a little bit, come back up, refuel again until that digestion actually happens, which is indecision at the end of the day. Building a platform to go higher and faster is less likely. It's not impossible. It's just less likely. So you've seen a couple of trades already. You've seen the idea of taking on the long for the push up from about the 868.75 area to the 920 area. So that pocket's been traded. Now it's about 920 to 975 if it wants to keep going. And note that the ES is now above 7,600, right? It's got room up to 7,605 at this moment in time. Let me know if you're able to, in the first 5 minutes of this market move, take on any trades, anything similar to what you saw me do, and feel free to let me know. All right, so that would be that's something that I can communicate back to other folks as well. Right now, I'm looking at the 1-minute chart again on the NQ, and I'm looking at the 1-minute chart on the ES. We're seeing an absence of breakout forecasters on the last closed 1-minute bar. The breakout forecasters are these dashes underneath the bar. What they help you signal is that you're likely in an expansive move that'll require less bars to make a bigger rise in price. They also come in the final stage of a buy or sell sequence. If it's a sell sequence, it will be red dashes above the bars. What you have over here is champion trend, and the green zone in the background over there is champion cross. It comes with the dot here. It was in play. We were in stage 1 right there at 925. But then we lost the dots and we got back into stage 1 at 929, but we also got a wealth signal on that bar and a FFF up triangle. So we went from stage 0 to stage 2 of a buy sequence, right between these two bars, these two 1-minute bars, right before the open. And then we went to stage 3 of the sequence, which involves the breakout forecasters right on the opening bar. But when we have an absence of 2 to 3 bars of no breakout forecasters and a bearish speed line cross, need the bearish speed line cross, we can come back and back test the last, the second, the third, the fourth. So we haven't had the bearish speed line cross. It's still early in the day. Momentum is still strong. We're above 920, and I'm considering, whether or not I want to participate in this. This is not ideal. And actually, we did get a breakout forecaster on this bar. So we had 2 bars with no breakout forecasters, no bearish speed line cross, another breakout forecaster. So I do have permission to take the trade here. The sequence is still alive. So I'm taking the trade. I'm in the trade right now. It is profit positive almost instantaneously. Let's see if we can push up. And I don't know if I'm going to make it all the way up to 975. And remember, 975 is the area of resistance of the champion trend sell zone trail line on the 4-hour chart for the NQ. So I'm going to take you back here. Trade looks like it's gone flat on me. I'm not going to stay in it. If the bar goes red, not interested, out right away. Okay, it had some profit positivity, but it was not willing to follow through. And we did have a little disjoint in the momentum over these 2 bars right over here, right? 34, 935. So there's a little bit of a pause in the momentum, and that. It's kind of like a glitch in the matrix, right? It's the black cat, if you will. So something's going on. And at this stage, this was a false positive breakout forecaster. I tried the trade. I had permission technically to do it. I know that the setup is not extremely, lucrative setup for the day overall, but it was there, and we've got momentum at this part of the day, right after the open, between 9:30 a.m. and 10:30 a.m. Eastern time. We've got really until 11 a.m. There's a lot more volume. There's a lot more volume in the first half hour, of course, as well, and especially in the first 10 minutes. So as far as I'm concerned, that was a valid attempt, and I risk managed myself out of it. No big damage has been done whatsoever. And what are we seeing right now? No breakout forecaster under the bar. No breakout forecaster under the bar. But I've got these double green dots. What's that? That's from the triple S buy signal. Now, the triple S indicator in the bottom of in the subchart is at a stretched location. It's at the top of the channel, and it's coming down from above the top of the channel. Let's look at it on the 5-minute time frame. Same sort of thing. Now, on a 5-minute time frame, there's a stat with this tool where it'll test the top of the channel and bounce right back up 2 out of 3 times. So there may be an opportunity for another rebound to happen over here. So I'm going to flip us back down to that 1-minute time frame and see if that is actually a reality. And it's not, from my perspective. I'm not taking on any longs here. Could this all fall apart? Could we end up coming all the way back down? So I'm going to pinch the chart over here so you can just see range a little bit better here. And look, we were at a range high around the 7:20 a.m. marker. We had that big push-up bar, around 8:12, 8:13, 8:14. We broke the top of that range. What this should be seen as is we're coming back to back test the breakout. Now, typically in a day where there's lots of momentum, lots of bullish fuel, we then have the opportunity to push up, and away directly. But if you don't have the fuel, even if the road is paved and there's street signs, street lights, everything's good to go, your car's all in good operation, but there's no gas, you're not going anywhere. So at this stage, that's the situation. This typically would have been a back test of a breakout area and continue on higher, but it's imploding, on relative terms for the range on the day. Okay, I don't want to use colorful words like implode without some qualification, because this is not a big thing. Right. The fact is that we're coming down to a line that we've been at, and it's an important line to hold. For the ES, it would be 75.94, and for the NQ, it would be 29,820. So 29,820 is the water line. It's the very important water line. We go underwater below 29,820. And that's what's happening right now. So now, could this be seen as imploding? Well, it's still a very colorful word, but yes, it has reversed dramatically back down. Do I have permission to short this and look for this thing to continue down? We're at support. I'm not doing that. I'm waiting. And what I'm going to do right now is do a quick poll of the room. What I want to get a handle on for myself right now is, are you being measured in your trading decisions? Okay, you can simply let me know with a yes or a no. Now, for some, that would mean less frequency. Some would mean just hands under buns. For some, it would mean similar frequency to what you normally trade, but smaller size, or a micro rather than a mini like you see me doing here, right? So I'm seeing the letter Y run through the chat. That's the number one thing, right? It's harder to make money once you've lost it, right? If you're doing it in a prop account, not a real money account, clawing back to positive status is in and of itself an onerous task, right? Being in positive status and then building on it always has a more warm and fuzzy feeling inside. Of course, the former is a little bit more, it adds a little more consternation, and it can give someone an upset tummy or a headache. But in any case, the focus is really on finding the next best trade, next best opportunity. So we've come back down all the way to support. We're trying to bounce back up right now, and I want to see if I can, take on a trade on the long side, because that is still the likely outcome is still a move that's towards the upside. Why? Always go back to the hourly chart. Always go back to the hourly chart. So the hourly chart, is it in a buy signal state? Yes. Is the blue line, the slow momentum line in the triple S indicator sloping up? It is. So there's not too many questions. It's still about a long side trade. We're back well above 820. We're in the 870-ish area right now. The 5-minute chart is in a buy signal state. We didn't get the classic test the top of the channel with the triple S line and bounce up. We did come down and intersect with the slow momentum line. And if we cross into the third quadrant, trying to play long is not going to work. It's going to be about shorting. So I'm watching that. It's threatening that. You can see on the 1-minute chart for the ES, we've moved into a sell signal state, and we're below the channel. On a 1-minute chart on the NQ, we're now transitioning potentially to a sell signal state. I don't think yet I'm ready to short this thing. The 1-hour chart still has my back, if you will. It is the backbone of the move. It is the backbone of the move. Okay, so let's go and see how this thing plays itself out over here. If we end up getting, the channel holding, and we get back up above roughly 870, 875, I can try a long, because we've already lifted up. We're at 75.95. We're above the wheels up line for the primary market. I'm going to give it a go right here, right now. So I'm in right here, right now. I have to be tolerant down to 52, but that's a lot. It's still something that can happen here. So I'm going to sustain the position. I have a reversal bar. I have a buy signal. Backbone of the move is still up. We've come down to support, imploded the whole move up, and we're bouncing off of that local support. So this logically makes sense, using market logic, that we have the potential to get back up towards the highs, but this could end up being the lower high that breaks us down back to support, and it becomes a short side trading morning, for a little bit at least. So I want to be careful. I don't want to let this get away from me. And for ES traders, we are below 95, so that is a bit problematic. But we're holding the center of the MSR channel. ES is getting a flashed on red signal, flash on, flash off. Let's see if the math ends up, if price ends up holding up. We're holding the center of the channel. We're popping up above the top. Double green dots are there. The channel's magenta in color here. It went from green to magenta because it's that signals technical damage. And if we go into the lower half of the channel, I'm bugging out of the trade. My expectation is that we firm up and we try to push back up towards the highs. Okay, so that's pretty good. That's pretty good. And we know that there's resistance at 920 in particular. So I'm still letting this run a little bit, but I would like to take some profit on the trade. Well, while I have it, I just did, but it was a meager amount, enough for, I guess, an expensive cup of coffee. That's about it. Now I want to see if we can get above that 895, 900-ish area, 895. And that would probably be where I would try for continuation. If this was going to continue to rocket ship up and that momentum was just going to carry us higher, we're at the right time of day. Okay, we're at the right time of day. We've got the path paved already, but there's not enough fuel in the tank, and the participants in the market are exhausted over the last couple of days. Nonetheless, I'm going to look for that long again above 895. Let's see. And if anyone got that last trade over there, good on you. If it's still in force for you, good on you. Amazing. ES is back above the channel on the 1-minute chart, so that's good. NQ is trying to come up above 895, and I'm taking it. Now, I'm taking it into known resistance. So I know there's resistance here, but I know that the push back up to the highs is backed up by the 1 hour chart, which is on my side. So I'm expecting 920 to actually be breached again this go around, and for us to start making our way towards 975. But of course, profit is profit. If this thing does not stay up in the air, I'm going to take some profit, which I just did, and I can rejoin the trade again above probably 935. So 935 to 975 would be the next range that we'd go up to. And again, 975 comes from resistance of the technical structure called the champion trend sell zone. There's the sell zone on the 4 hour chart. There's a trail line that comes with it. It's where we got challenged yesterday. It's still in the same location around 975. The 1 hour chart is in a buy signal state. So I'm fine more so with playing long than short. Right, the 5 minute chart's in a buy signal state. It's high octane buy because we're seeing the triple S line above the top of the channel, and we're sitting at what 913 right now. We're still not above the high of the last closed 1 minute bar where I had a profitable trade. I'm looking for probably 930, 935 to be taken out, or this is simply coming up to the top of a range, and we're going to be batted back down. Now, in the case that happens, if we come right back down towards lows, I could start shorting somewhere around 855 if I wanted to. But because of the technical structure and signaling on the 1 hour chart, I really would want to know that the bottom is falling out. I'd want to be below the water line, that 829,820 marker, before I really want to short anything, personally. So there we go. And can you believe it? It's only been 18 minutes, and I don't want to make this more lively than it is, because it's not, right? It is a chop fest day. So I came into the room this morning. I let you know ahead of the market start that we're likely going to be in a chop fest. Yes, there is likely going to be an attempt to go higher and try to get above the 30,000 marker on the NQ. And we broke out the ranges, right? 820, 865, 920, 975. We had that all down. Now, we also know what the risks are to the downside if we end up breaking down. But right now, this is still a good part of the day where there's momentum. So I want to take advantage of this. If we get above that 935 area, we should be able to breach and run. Now, this is the potential for a resumption moment, so I'm going to take it. I did not get it at the right time, but you can see as soon as I hit the button, the trade is worked out. It's profit positive instantaneously. I don't know that it's going to last, right? So I'm going to see if I can hold on to this for the ride up to 975, Now, I got it at 925. I was planning on getting it at 935, but I saw that push up off of the fast speed line. So I took on the trade. ES is making its way up to 76.05. Again, potentially this slowdown I don't like. I'm taking profit. Thank you very much. There could be a burst that takes me up 30 points. I'm not going to be part of that move. I'd rather lock it in. What was the saying that I'm a little older for those who don't know me very well, but my teenager, he came up to me, he started doing this, and then he said, "Clock it." I'm like, what does that mean? Clock it. You're locking it in, or it means something towards that end. It's remarkable. So at this moment in time, I think my trader's intuition was correct over there. We have reversed that bar. We didn't make it up to 975. So it was a good entry. It was a good exit. And now the question is, can we get continuation up from here at this moment in time? All right. Okay. Pardon me for just a second over here while I just look through. And Gus, the one thing that I want folks to do is, yes, get zoned in, right? So the bias on my narrative and my analytics is to keep you fully engaged on where's the risk, where's the reward opportunity, where are the trigger levels, and when can one execute. I'm not going to be right all the time, obviously, but if I can continuously be objective, I have a better chance of doing better than not. And objectively, we have pushed out to make a higher high. We're a little stretched at this moment, but the backbone of the market move is up. The hourly charts got the triple S slow momentum line in the subchart there tilted up, right? So that is positive, right? That is positive. And that supports more so long side trades than short side trades. But we know that gas is probably out. It is out. So we can have chop. We can have indecision. We can have rises that fail to continue, even though everything looks perfect, we can end up going, oh, well, the car just stalls out because it doesn't have gas. But right now, the hourly chart's triple S line is breached into the fourth quadrant. So there's 4 quadrants in this channel, right? The uppermost quadrant is a quadrant that I call the perform or plunge quadrant. If buying does not beget buying when the indicator is in that quadrant, when the triple S line is in that quadrant, it's very easy for the market to plunge. So now the 5-minute chart's above the top of the channel. So it's extraordinarily stretched. But we've got a buy sequence that's still in place. Breakout forecasters are there. Triple S is in a buy, obviously. And we are rising up to the 975 marker. And I've missed my next entry, I think. I don't want to chase it. For those who caught it, amazing. 975 should act like resistance. And I'm a little too close to 975 at this moment. So I'm not going to try to take on the trade at this very moment. Nonetheless, we need to actually look at the interaction around 975. We're at 970 and 65 right now. The 4-hour chart, right? We saw this yesterday. It came up to it, perforated it, came up to it, perforated, wasn't able to get above. So now it's pulled back and like a slingshot, and now it's trying to push right through. Okay, so if it can push right through, amazing. It should also come with a consistent higher high on the S&P E-minis, which are headed up to 76.05, which I already qualified for you earlier. So that is there. There's nothing off base just yet. And if it breaches 975, I'm not in the trade, but could I join it? I could do it on a scalp basis, right? If I wanted to take it on above 975 from here, which I might try. But we got that big push-up bar, kind of like the profitable trade I took right over there, where I got out of the way. And we saw it come right back down, but it held the speed lines, indecision, and then another big push-up bar. Is it going to repeat the pattern, 2 candles down or 1 candle down, and then back up again it goes for a big move? It's flirting with a breach of 975, but it has not clinched the deal, so to speak. The date is still continuing. We have not gone home yet. Is the insight? All right, Emat, I like that. You clocked it. The vernacular and the language has changed so dramatically over the last 5 years in particular, and it's all part of the big social experiment that we're in. Okay, where are we at right now? We're sitting still underneath the 975 marker, still have more potential to go up. That potential to go up is really all about getting through resistance at 29,975. We're about 25 points or so below it right now, maybe 30 points or so at this moment. Yep, and we have not yet made it through. We have not come down and taken out the big push-up bar right there, so that's good. That at least keeps us in the running. But if we come down below 925, which is what's happening right now, we can see this whole thing implode the same way that it did this go around. Maybe to make a higher low, right? And maybe to actually put the market in some sort of a uptrending fashion, smaller range, but uptrending fashion to end up getting above that 30,000 marker. I do want to take a quick look-see around the neighborhood. And I'm going to do that on another screen. And Gus, I'm glad, that's good reinforcement, for me. If you're getting the right insight, well, and Mark, what's happening with XLF actually? Yeah, you're right. I'm not seeing it tick away. So I'm going to just kind of refresh it. I'm not seeing the data tick away on XLF. So I don't know, Mark, that's an important insight. I just pulled up. Oh, there it is. It's ticking away. So financials just blasted off, right? They're at an extreme. They're helping the ES hold up while the NASDAQ is trying to push up. Volatility has dropped like a rock, which is part of the mechanics of the derivatives market side of volatility. It tends to compress on a Friday, or it has that bias. It doesn't always compress on Friday. It has that bias. Let me just go take a look at a couple of the other tools that I'm looking at. I'm looking at positioning of the market on volume weighted average price cones. That's what I'm doing on the other screen while the market is kind of figuring itself out over here. If you want me to bring those up, you just let me know and I'll bring them up. But at this moment in time, that's a lot of noise. I want to keep focused on the next trade, which could be starting where it is here. Okay, I'm not going to take it here, right? I'm not going to take it with this kind of a setup. We've got a bearish speed line cross. We're coming into rising support. We're in a kill zone right now. If we poke our heads above 940, I could consider it. I like it better above 955. And we know 975 is resistance that held. It worked yesterday for 2 4-hour bars. So that's, not to be trifled with. As far as location goes, I'm not seeing anything that's extremely negative. I'm not seeing anything that's extremely negative. I know that on the month-to-date cones, on the daily cones, we're stretched. There's not too many questions about that. So location is also an issue. I'd say the ES is, Vivian, is just as choppy. If you're looking at the screen, the 1-minute charts here are pretty darn clear. They're following a similar pattern, right? And the range, just keep in mind, the range has been 75.90 up to 76.05, 15-point range. Okay, if we break 76.05, we open up the next leg up for the S&P E-minis, and that next leg up is about, it can take us about in and around. Let me just make sure I've got this qualified properly with my key decision level sheet. Yeah, 76.12 to 15 was what I was thinking, and the line is at 76.13. So above 76.05, there is another 8 points of potential upside that opens up. And we're making a push up right now to 50. I'm considering taking the trade on the NQ or MNQ. The trade on the ES would be above 76.05, 76.05 and a half. The NQ is coming into resistance, but if it's going to make an attempt to hit 75, I might be able to get 5 to 10 points out of the NQ, which might not seem like a lot, but in a day like today, that could be worthwhile. And no, brought me right to the edge of considering the execution and triggering it, but it did not follow through. It's still a bullish candle. The fast speed line is trying to cross up above the slow, so it's still a higher probability that we move higher. So I'm going to see 955, and I'm going to make this trade alive. Whether I stay alive in the trade or not, I don't know yet. That is another thing to be seen. So let's see if I can get it. And the ES, I think I would wait on the ES for 76.05 and a half a point. That gives us enough distance above the local highs, eliminates the, this is a double top formation type thing, harm, and puts me in the running for a continuation up, but it's not happening, which is, again, par for the course for this market day. Right, we're dealing with a market that has got very little fuel left to continue up at this stage. Okay, give me a second here. I'm just looking at the chat. When you get an FFF account, I can see Bunup. I think that you're writing in over there. When you get a FFF account, you're going to automatically get access to wealth charts. So you'll get the platform to be able to trade the FFF account on it and use the same sort of indications that I'm using as well. Okay, so I want to make sure that it's difficult because there's so many people in the room for me to catch every comment. So, and keep straight what I'm doing here. But that's what I do. So, be patient with me, and that rhythm, as we grow together, will continue to improve. Okay, so what I'm seeing right now is, again, just building a base, trying to get back up above the 955 marker, where I could consider going long, or this could end up being simply, the top of a range, top of a box, if you will, and we come down from the top of the box, right? So one thing that we can do to make it obvious is just draw the box on the screen. And make sure that folks are aware that this could end up just succumbing to gravity here. So I can effectively fashion a box right around this area. It's not drawn in perfectly well with volume profile, but it is good enough to tell us that, hey, we're not out of the box. We break out above the top of the box, I might have a trade that I can take on. It's the same trade I was discussing a moment ago, right above 955. And on the S&P E-minis, because there is range up to 76.13, I would rather not take it as it's breaking the high. I'd rather do it at around 76.05 and a half. The NASDAQ I'm willing to take as it breaches the top of the box, if it does here. And again, remember the bias for directional trading is long side trading because of the configuration of the indications on the 1 hour chart. But we've had a very expansive 2 days in a row, almost a 4% rise from lows to highs, a couple of days ago, lows to highs yesterday. Okay, here we go. Let's see if this little indecision print ends up being a breakout. Now we need something that looks like that. And this would be the second attempt to get up through, well, up to 975, which we know is resistance, right? We got up to about 970. 975 is what we need to see breach. So there's two tactics here. I could take the breach of the top of the box if I've got some good acceleration, or I could just simply wait for 975. I got some good acceleration, so I'm taking the breach. Okay, now this is the second attempt to get to what? 975. What's 975? It's resistance from yesterday. So this is not a trade where I want to have big size. I want to have a tight leash on it. And it is an attempt to get through a major resistance structure. Now we're falling back down to the speed lines on the 1 minute chart. And again, the resistive structure that we're trying to come up above is sitting right there, right? It's at the 975 area. It's the champion trend sell zone trail line on the 4 hour chart. My bias is to play long because I've got my indications configured on the hourly chart, which matters the most to day traders. That slow momentum line is sloping up. The 5 minute chart is trying to breach the top of the box. My trade's not profitable right now, and I'm concerned about it, but I still have rising support underneath price. But again, we know if we run out of gas, this whole thing can plummet and it can ruin someone's day. So be very careful. If we breach the slow speed line, we're coming back to the channel and I'm going to exit the trade. We're holding the slow speed line at this moment in time. The slow speed line is that magenta line right under price where my crosshairs are. Fast speed line is the cyan line. I'll spread it out a little bit more. We're still in a buy signal state, but we're not seeing acceleration. We know we're coming into resistance. We know it's the second attempt to try to break out, but it has not been able to break out. And it broke that slow speed line, well, perforated it, not broke it. That was my risk management cue to say, see you later. It could very easily bounce back up off of that line and try to take out the high. That's the next trade. I took the attempt to breach the top of the box, break out, and make a run to 975. That would have been one trade, and then another one above 975. That failed. Okay, so I risk managed myself out of it. If it wants to assert itself again, I'm not going to take the trade again just at the 955 area. I'm probably going to want to take it above the high, 970, 975. And the risk of trying to catch it if it actually makes it up there is it could be fast. And if it is fast, I might not be able to catch it in time. That's okay, right? I don't have to catch every single move, but there it is. Okay. And bear with me for a moment here. I'm just reading through some of the comments here. Okay, so are folks getting what they need from me? Are you getting the insight, the commentary, the directional decision making? Are you getting what you need? Give me a lucky number 7 in the chat and share that with me. Because at this stage, the insight should be very clear. We're in a day that's run out of gas. The NASDAQ is the underperformer. The underperformer is affected by a lack of gas and the fact that we're seeing modest rises in oil, modest rises in the dollar, which are both headwinds to equities rising. Now, again, it's coming up. Okay, this is the third attempt, right? So we had 1, that's 2. Markets like the 3, and I'm so tempted to just try it here, but I'm waiting. I'm holding myself back. I'm going to wait for the high to be breached to take the trade. So we're trying to breach the top of the box and break it. That's what's happening right now. And again, I'm holding myself back. Even though I know the law of 3 or rule of 3, markets love the number 3. The third attempt usually is, the winner, the clear winner or the clear loser? 3 strikes and you're out, or third time's a charm? Oh, George, that's funny, and perhaps that is an omen. But and I'm not averse to considering all sorts of things when we look at market direction and rationale and trading decisions. But it looks like folks are getting what they need from here, which is good. Okay. And it's 10 times smaller, Ron F, the MNQ versus, so oh, sorry, I see what you're saying. MNQ1 is the continuous contract. So Wealth Charts is now upgraded so many of the things in the Wealth Charts app overall, where we can just put the continuous contract in the chart or in our trading domes or execution area, and it will actually just trade the front month contract for you. So MNQ1 represents the continuous contract, and MNQU would be the front month contract. MNQU6, right, would be the front month. But Wealth Charts is now that intelligent that it will take the front month contract if you use a continuous contract. So it's a path of least resistance for those that might be newer to this overall, right? So you don't have to worry about the contract month codes and all of that stuff anymore. Okay, so we have not breached above the top of the box and been successful. We're still in the box. And look, I, in earnest, took the second attempt, right? I saw failure potential. I got out of the way. It's just as important to know when not to make that trading decision as it is to make that trading decision. The third attempt to breach the top of the box was a couple of minutes ago, and I was very tempted. I even said it to you, live stream of logic. I'm giving you exactly what I'm, what's happening in my brain. I wanted to take the trade, but I held myself back. I said, okay, if it's third time is going to be a charm, amazing. But it can also be, 3 strikes and you're out. So far, the third attempt has obviously been unsuccessful. And Ray, I can absolutely pull up the VWAP codes in just a second. I want to see if it's going to be a fourth attempt right now to break through. And look, we're going to have to cycle through the time frames for a moment over here. The 1 hour chart still has a triple S line in the performer plunge quadrant, the fourth quadrant. So the bias is still to go higher. Okay, and the blue line sloping up. The 5-minute chart's overcooked. The triple S line is above the top of its 4-quadrant channel. And in this case, the channel is sloping down, but the slow momentum line is sloping up. So we're kind of in a cross current of math kill zone, if you will. But here it is. It's trying again. It's trying again. I'm holding myself back. I'm going to wait. Maybe the fourth attempt is the one. I'm going to wait for what? 975, 970, somewhere in that area. And it should just slingshot right through. Let's see if this is the one that makes it. We're very close to where I'd want to trigger the trade, which would be around the 975 area. We're at 957, 56, 60. Let's see if we get a little bit more enthusiasm from buyers here. If we were truly seeing, a canopy of shorts come down to pressure the market, we would be making deeper dips each time the sellers are in control or buyers decide to get out of the way. So one insight to you would be, if we are not successful at going higher here and we can't break 975, which we know 4-hour chart, champion trend sell zone, right? It's not a resistive structure on the daily chart. We're above the actual channel on the daily chart, right? The bottom of the channel is at 920. It's the 975 area that is the resistive structure that we're dealing with. And there's no resistive structures on the hourly chart outside of local highs. There's no resistive structures on the 5-minute chart. It really is just in a buy signal state. So this is another potential long side trade. But if it doesn't work out and it gets hammered back down and we make a lower low versus a low from several minutes ago, we come back down below 900, it's an insight to you that more shorts are coming in, and or those that are holding on to bullish longs from earlier in the session are giving up. So we don't know that yet. All right. Right now, we're still in a mathematically, algorithmically driven buy signal state on the hourly charts. All is good there. So we need to just see if that can continue or not. And there you go, right? So I held myself back on the third attempt, and this fourth attempt, I held myself back and said, nope, not until we get above 975. We know there's resistance there. If we breach that resistance, it can just get squeezed up. And ultimately, it's 975 up to 30,040 points, which is pretty much the top of the chart, right? It's this pocket right over here that I'd be interested in trying to capture. If the market gives me the opportunity for it, I don't know. The bias is for that opportunity to present. Let's see. All right. And Abdi, that's a good point. VWAP at 29,900 for the NQ. In fact, I know, Ray, you asked about VWAP cones as well. So I'll toggle that on another screen and see if I can bring it on. Well, Howard, that's an impressive performance already. And I second your motion to head out and go to the gym. I second that motion. But I am here, and I'm here for everyone. I'm going to see if I can get this trade on right now. Fingers on the trigger. Button is depressed, waiting for the breach of 975. If that breach happens, I'm going to try to get into this trade. It's not breaching just the high. The high was around 968. I want 975 breached, and I'm backing away from the buy trigger. So this is the story of a indecision type nature day. This is the, this is how it ends up playing. Okay, I'm looking for any good reason over here to say that up and away can happen. The ES is now being dragged back down. Financials helped lift it up. Financials are dragging it back down. Oil is on the rise, which is a negative correlation to the market. This is not a great news story day to begin with, but we knew that coming into the day, right? Coming into the day, what you heard from me was that this is probably going to be a chop fest, probably going to be indecision. We've run out of gas. The bias is still up, but we ran out of gas over the last 2 days with the big expansive moves that we've done. So probably better off not to be swinging for the fences today, or being very frequent in the trades, or using full size contracts. Micros might be better on the day to make the trading decisions. And so Bill S, the 975 marker was part of the Champion Trend Pack Indicative Toolkit. So when you're looking at indications, multiple time frames help you understand the cascade of support structure, resistive structures above you, or the steps of support structures underneath you. The daily chart has resistance of the top of its MSR channel. That value is sitting at 29,920. We're above it. Okay, so we don't have resistance from the mathematics driven by the toolkit. Okay, we're above it. The 4-hour chart yesterday came up to the champion trend sell zone trail line. Okay, one bar, another bar, a third bar, a fourth bar, and you could even say a fifth bar over here so far on the day, because we're now in the next 4-hour bar from 10 a.m. to 2 p.m. And it's failed to break that champion trend sell zone trail line. So that's the challenge line. That's where that structure of resistance comes from. Knowing where the roadblocks are and which way the roads go is important. Knowing whether the car has got enough gas is important. Knowing what traffic is like, what's happening around and intermarket is also very important, right? So that's why I'm looking at a lot more things than the two charts that are on the screen right now, trying to determine whether or not the interplay between certain sectors can pick up the slack from other sectors that are not doing very well, or in general, the ES versus the NQ. And what I've determined at this point is that we are not being supported by things that are not Mag 7 stocks as much anymore at this moment in time, but they still have a chance to come back and support. They've actually got a little bit more fuel to expunge. Right, the move was much more expansive on the NQ over the last couple of days than it was on the ES. The NQ has used up more of its bullish fuel. So the insides of the S&P E-minis or S&P 500 have got more balance in representation of the sectors of the economy, the 12 or 13 sectors, versus the Nasdaq, which is dominated by the Mag 7s. Right. So, like the top 10 stocks in the Nasdaq make up half of its market cap weight, roughly. So we know that right now, I'm just saying to you, we've got a bias for up. We're underneath the canopy of resistance. The intermarket analysis tells me that I'm likelier to see the S&P 500 pick up some of the slack for the Nasdaq. And if it is able to pick up that slack for the Nasdaq, it can hold the Nasdaq up long enough, for a buyer or buyers to come in, and traders are looking to the left and right of themselves to decide whether or not to get in or out, right? And at this stage, the 1 minute chart of the ES, as you can see, is holding the channel. It's holding the center of the triple S channel in the subchart. It's trying to push up right now. It's likely to provide assistance to the Nasdaq in this moment. If it does, and we see the ES, MES, whatever you're looking at, get above the top of the channel, it should push the NQ back up towards the top of this box that we've drawn in. And again, we're waiting for a real breakout. And we've had 1, 2, 3, 4. This is the 5th attempt to come up above it. Right? It's getting a little long in the tooth, but again, this is consolidate to continue because the 1 hour chart signal is still positive, right? Hey there, Mario. And MNQ1 versus MNQU, you're going to see this. You're going to see the same thing in terms of the indications, because all it is it's just a naming convention, right? It's the continuous contract. Now, Wealth Charts allows you to put the continuous contract in your trading domes themselves. And what Wealth Charts will automatically do for you is go to the front month contract of that security that you're putting, of the contract that you're putting in, and it'll automatically be MNQU. So you can actually just continue to use the continuous contract as we move through contract rollovers. Yeah, I know it's a great improvement. I was on the phone with Rob yesterday. We were talking about all of the improvements. There's so many things that have been updated, upgraded, and next week's going to be pretty impressive, folks. I don't know if folks know, we've got a week-long trading challenge happening next week. So it's a trading competition, and there's over 1,000 prop eval accounts being given away during the Wealth 365 Summit. It's never been done before. That size. Okay, so now we've clearly failed. We're coming down and making lower lows, which means the longs are giving up. Yeah, it took 5 attempts, and the 5th attempt failed as well. So should I flip to short? Right? That's the question. My answer is no, because I'm still seeing the S&P E-minis try to pick up the slack for the Nasdaq. I'm looking at a dashboard on another screen that has some of the sectors that correlate well to the everything else market, outside of Mag 7 stocks. And they're not in great shape, but financials just made a V-shaped bounce. And, that's, I think, over 10% of the market cap weight on the S&Ps. So it's certainly helping out. And oil got rejected underneath yesterday's VWAP. So it's getting pressured back down, which can help raise risk-on sentiment. We've come down on the triple S indicator on the NQ on the 1 minute chart down to the slow momentum line. We're breaching it. You're getting the red triangle. We're below the channel. It doesn't look good. It doesn't look good. It looks better for shorts, right? We still have to breach below 870 for me to want to think of hitting the short button at all. And I'd want to see coincident or led by, the ES giving up. So we've got the beginnings of this pre-trade conditioning set up on the 1 minute chart for the S&Ps, brought to you by the Triple S Toolkit. Down triangle, up triangle, down triangle, at least 3 signals, which means it's left on a closed bar, separated by no more than 6 bars. If we're left with a down and price action comes down below the bottom of the MSR channel and we've got double red dots above the bar, the pattern is engaged. Otherwise, we'd need 2 bars closing sequentially lower below the bottom of the channel, and down the hatch this goes. So we may be at that point. I don't have the pattern engaged over here. I could take an opportunistic short grab below support here, but I'm not doing that just yet. Because look, the primary bias again from the 1 hour chart is up from that slow momentum line. But the triple S line has gone from the uppermost quadrant, fourth quadrant, and has breached back into the third quadrant. If it breaches the fast momentum line, yeah, it's game over for longs. We're, for a little while, and down we can go. Okay, there it is. So there's the breach of the bottom of the channel on the ES. There's the breach of the champion trend buy zone on the 1 minute chart. I can do an opportunistic short somewhere around here, and try to capitalize on that. If it slingshots back up and the green bar goes right back up, I'm going to bug out of the trade right away. If there's going to be follow through, which would be expected, I can stay in the trade. It's indecisive at this moment. My finger's on the trigger to get out, but there should be some follow through. Because we've seen both the ES and the NQ, and the pre-trade conditioning pattern is not engaged yet. We don't have double red dots, so this is a higher risk entry. So I'm in total control of my position. It's not in the money. I'm still holding it while we're trying to bat our heads up against falling resistance under a support structure that opens the door for more downside at this stage. Financials are still acting as a ballast, though. They still are. So at this stage, if we come up above that fast speed line, I'm going to take my L and get out of the way. We could easily get hit back down and come back down again, but this can also be the moment where it firms up. So I'm not interested in being in the trade at that point. If I'm going to directly continue down, sure, I'll stay in the trade. The next opportunity over here could be an opportunity for short. It would have to be below the lows from 845 down to about 820, 815. Would be the idea. On the ES, it would be below 75.94. So below 75.94. Okay. All right. Look at the double red dots. We're starting to flash on there. So that would be a good sign if we get it for a short side trade. And I'm not extraordinarily excited about short, but if this is what the market wants to give us, okay, that's fine. We shall see. Okay, so at this stage, a reversal has happened. I risk managed myself out. I did take the opportunistic grab, for a potential, fallout down to the bottom of the box. It didn't happen. We've come roughly to the center of the box, and we're trying to bounce. Is this a good opportunity to go long? We're rising into falling resistance, right? Do you want to trade in the box? Okay, trading long in the upper half makes sense. Where's the better long? Above the top of the box. All right, how's everyone doing? Let me know. It's gonna be a choppier day, right? We know that. We knew that at the onset. And I'm starting to see oil rise again and try to make a run for its border, which is a problem for equities to continue rising. I'm seeing volatility spike back up. So Ray, let's do the VWAP cone lesson midday today at my midday session on wealth charts. So bring that question up, and I'll do a little tutorial on that specifically. Right now, I'm in the throes of figuring out if I want to short this thing because I've got the double red dots forming. The bar's not closed. Pre-trade conditioning pattern is there. And if the ES is not going to pick up the slack for the NASDAQ and the Mag 7 stocks are out of gas, down the ship can go. So I'm considering the short. We hit 75.94 on the ES. We're starting to breach lows or come close to the lows on the NQ. I'm taking an opportunistic entry for a continuation lower. I don't have the pattern confirmed yet, so it's still a high risk decision from triggering a trade standpoint, but I'm using the micros, so I'm not that concerned. This count is well in profit positive territory, so I'm gonna manage it accordingly. But I like the double red dots that I'm getting here. I like the pre-trade conditioning pattern. And one of the risks here is that the Mag 7 stocks decide to grow up and put their long pants on and go up, up, and away. Okay. So far, the evidence says that that's less likely. Out, not interested. So I'm just going to extend the box out a little bit over here. and I'm going to add a piece of analysis to this called volume profile. So I've got my volume profile tool, and I'm going to start it pretty much right here, drag it out into the future, and it's going to give me a volume point of control, which is the top of the box, which is where we spent the majority of the time in this range anyways. So, you know, there's no new insight off of it. It's just validating for me that longs are going to be better above the top of the box. Shorts, we can kind of scrutinize this a little bit here and go, okay, if I wanted to short, you can see the volume profile histogram sticking out on the left-hand side of the screen here on the NQ chart, below 875, okay? Below 860, even better. Below 860, even better. And yeah, you know, it's not a very complicated insight. If this thing wants to mature and go up, there's a couple of things that are working against it right now, like oil, but I'm seeing the dollar cool off a little bit. Precious metals are trying to glow up a little bit more right now. So as precious metals try to get shinier, they're giving me a little insight by proxy that we're not going to have as much pressure from the dollar, which is obviously the most important thing because everything is priced in it, and we're making a run for the border. So if one is long, I can't fault that at all, right? We're above the center of the box. You know, I've had a couple of attempts up over here, some successful. I'm going to just wait for the top of the box to be broken and then try to get into a long. But this is a potential, you know, the last 1 minute bar was a potential triggerable entry. Again, it's in a marketplace where it's very choppy, right? We didn't see lower lows. The pattern did not follow through. We ripped right back up. Expectations for this day would be choppy to begin with after a big expansive move. So there's nothing new here until we break the top of the box. If we do, is it likely that we break the top of the box? The 1 hour chart says yes. And the top of the box is roughly where resistance is evidenced from the 4 hour chart, which is where we had problems yesterday and really also today so far, right? We've been trying to hammer at it. This should be consolidate to continue higher. That's what it should be. Okay, it doesn't mean it will be, but we are seeing prices come up on the ES now. I'm seeing small caps turn up, financials off slightly. Net effect is more positive for the everything else market. Oil is still not relented. Metals have gotten a nice glow on. And again, is it clean trading? No, but my hourly chart backing is still, the bias is still up. The triple S line is back in the performer plunge quadrant. It's in the uppermost quadrant. And if one is, you know, really bent on making the next trading decision, the next trading decision for me is going to be only above, on the long side, that is, only above the top of the box. Right, I could try it as it breaches that volume point of control at 29,945, 950. If I want to short this thing, it was the last trade that I attempted that I failed on, that I can try again, but it would be somewhere below 870, 860. And we just did the work to identify those lines. So not a big surprise what's happening right now. Not a big surprise, right? Not a big surprise. But it held the test of the center of the box. Now, a little lesson, when you're dealing with sideways ranges, typically if you have two full oscillations, which we don't, okay, if the third oscillation hits the center of the box and turns up, that's bullish. But we don't have two full oscillations. We have one full oscillation, one half of an oscillation, and it's attempting to go up. The stats are still better than 50-50, but not a whole bunch more than that. So I'm going to wait. Rather than count on this, you know, making it to the top and breaching, let it just breach. I'll take it on the breach, maybe. I'll take it on the back test, and we'll see. And on the 1 minute chart, there is technical damage for sure. For sure. Let's see if the 5 minute channel is technically damaged. It is not. So it is, and for folks who are newer to me, when I'm day trading, I'm actually day trading the signal on the 5 minute chart. I'm using the 1 minute chart to trigger the trade, right? I'm above the speed lines on the 5-minute chart, or above 920, which is an important marker. That's a good thing. And we're not technically damaged on the 5-minute chart. And the 1-hour chart's giving us the backing to say, yeah, the bias is up. And the triple S line has poked its hairs back up into the uppermost quadrant. So all of this is set up to go higher. But on the heels of 2 days where we've had a 4% move from lows to highs a couple of days ago to yesterday's highs, we should not expect, big expansive moves and a lot of trending. We should expect indecision. And that's effectively what we've got. You go look at a daily bar and you'll see indecision. There's your daily bar, right? Massive move from Trump's press conference moment 2 days ago to the highs yesterday. And now it's indecisive, trying to gather itself enough to actually break the high, get above that 30,000 marker and go. But we're a little light on fuel. Now it's making its move up to the top of the box. It's above VPOC. I said I'm going to try it on the breach. I'm trying it on the breach. Now, if it gets pulled right back and we don't follow through, then it'll have to be another attempt, right? But I bought it on the breach like I said I would. I'm seeing the ES above the top of its channel as well. I know that there's resistance at 960. I know there's resistance at 975, right? So now comes the moment where either this push is good enough or unfortunately, that was really bad. It was a bad risk reversal. So something happened there that was pretty nasty headline-wise. Okay, and that happens. And then having a mechanical stop in can make the difference. So that was a bad moment. And I want to see if I can catch some of the bad as it continues. So I'm giving it a go. I don't want to see it whipsaw, but there's a nasty headline probably, related to what just happened. So I took some profit on that, tried to fix the damage from that last moment, but oil just shot up very dramatically. Very dramatically. Like I'm looking at another dashboard on another screen. I'll just pop it up briefly here so you can kind of get a sense of it. And that's what just happened. Okay. I'm representing with USO. It just rocket shipped up. So something bad has happened. Headlines come out. The dollar's gained. Precious metals got slammed. Market got slammed back down. We have an extremely strong downtick. So a very strong sell impulse has come into the market. And we broke the bottom of the box. Now, with this kind of volatility, and sensitivity to headlines, we want to be very careful. Was it a headline that is going to be overturned? Are we going to get another move back down? I don't know. So Abdi, thank you for putting that in there. U.S. President Trump says Iran has asked us to continue talks. We have agreed to do so, but the United States has stated to them in no uncertain terms that the ceasefire is over. That's trading. So unfortunate that I didn't have my stop in at that point, but that's a good lesson. If you have a stop in, that's going to make the difference. But that took me out $150 or so, and I made 70 of it back, shorting some follow through. So I'm controlling my decision making by using a smaller contract, and of course I'm going to be in the spot where I want to produce as many credible entries as I can and teach along the way. So right now we've had that breakdown. Is this reversal off the low? The market not believing it? Is it a spitting image of a taco moment? I don't know. What I do know right now is damage has been done. Oil has not relented. Okay, financials got slammed, markets got slammed, metals got slammed, and the reflexive retrace back up right now is standard fare, right? Shorts cover a little bit, but we have not yet come back up to the waterline from where that headline popped out. So no decision for long. Reshorting decision, fairly straightforward, below the bottom of the box. One could technically look at shorting it below 820, right? 29,820 is the waterline, and I might actually take that trade on. Getting closer to it, bottom of the box is around 800. So I want to see if it wants to directly drop. If it wants to heal itself, it has to really get back up above the waterline from where it dropped before I would consider the long. Otherwise, this thing can be so choppy and rip right back down again. And for folks who are asking questions about account giveaways, come to the Wealth 365 Summit next week. Next week, we are, I'll just put the slide up for folks who are asking. Let me see if I can find it. Because I see some folks asking. So I just want to make sure that folks know, next week, we've got the biggest Wealth 365 Summit that we've ever done. And our sponsors for our show next week, in totality, are giving away over 1,000 prop eval accounts next week. Over 1,000. And there's a trading competition as well with amazing prizes on the back end of that. And it's a week-long trading competition as well. So, for those that are interested in, getting a account giveaway, if you're asking me that kind of question, well, guess what? Next week is your week. You're going to have an amazing time at the summit with incredible speakers, a live trading competition, and the link. Let's get the link up there for you. Sorry about that. Kind of want to finish the conversation with an actual transaction here. So so you can go to this link, joinziad.com. Just type in joinziad.com. It will take you to the page, so you can get your link in, get linked into it, and get your chance for that. This has never been done before, by the way. Right? It's 1,000 accounts, more than 1,000 accounts. And there's a trading competition during the week as well with real prizes, including a cash prize of $10,000 as well. So it's pretty cool. There's lots of enthusiasm around it and lots of energy around it. I'll be presenting with Rob Hoffman, who's going to be there every day during the summit. I'll be presenting several times and looking very much forward to the trading competition. Looking very much forward to, just next week in markets overall, where we're getting more earnings. And of course, we've got this lively geopolitical environment. I'm trying to stay positive about it by using the word lively, and we'll see how it goes. So this should fail based on the damage that's been done and the nature of the headline that we've gotten. But oil's pumped. It's come back down. Okay, it's not unclenched completely, but we did get to a state of deep oversoldedness, if you will. 3 standard deviations below normal on the S&Ps, on the Nasdaq, and we're trying to mean revert right now. But the mean is VWAP, and it's sloping down now. So we are trying to get above it and trying to stabilize, but I don't trust this moment at all. Well, that's amazing. I see some good results in the chat. Some folks caught the drop, which is amazing. But I hope that the answer to the question on giveaways is clear. And yes, John G, 100K accounts are going to be given away next week as well. Certain 100K accounts are going to be given away as well next week. So it is certainly going to be an exciting week. And that's what happens, right? You get a big dose of reality on the market, right? And the reality is we're at the behest of headlines, and we're in a day where it's less likely that we're going to be trending. It's more likely going to be chop, and that has, proof positive is here, right? This is where we started the day. That's pretty much where the cash hour started, or a minute or so before, and we've been in a box that has been damaged dramatically. Now we've come up to the center of the box and we're failing to go further. So there can be a short here. I'm waiting for my opportunity. I'm taking one. It's very opportunistic. I want to see if I can get something back down to the bottom of the box. If we come up above roughly 885, this trade is going to take a dive. But we're in a sell signal state, and I want to play that resumption. I'm not getting enough down. Do I hold on to it? I'm holding. It's gone slightly profit positive. Let's see if we can get down to the bottom of the box now. You know what? I'm taking profit. right? So of the 150 I lost, or 160 or so I lost, I've made 100 of it back shorting, right? I was trying to play the breakout above the top, but I did not get that opportunity. In fact, it was that singular bar that, unfortunately was the moment of that headline release, and down things went. And I did catch a little short that gave me some recovery, and I just caught another short right now. Still have to make up a little bit, but overall, I'd rather be methodical about it. I'd rather be very controlled about it. And just out of curiosity, are folks okay? Let me know. If you're doing all right, give me a lucky number 7 in the chat. Let me know that you're keeping yourself in check. Okay. When we have these spikes of volatility and these types of moments in the market, the way that I describe it to most of my students is it's like getting punched in the gut, and you're not ready to take that punch. What's the Mike Tyson phrase? Everyone has a plan until they're punched in the face or punched in the mouth, whatever it is. Chemically, it takes anywhere, it's a little shorter for women, it's a little longer for men, but roughly around 20 minutes to have the chemicals kind of sort yourself out so that you're back to a neutral state. So don't be hard on yourself. You're not seeing, that was a massive drop for what I've been trading. And I've recovered more than half of it by trying to keep myself in check. And all I'm doing now is going back to first principles. That's what I constantly do, which is all I'm looking for is the next best triggerable moment on the heels of a setup that I like, I'm comfortable with, is a higher probability setup. And I took a little short. Looks like, it was the right idea not to stay in it, because we're not dropping precipitously. I'm watching things that the market's correlated to on the other screen. That was the layout I brought out. That was very noisy. I'm not going to bring that out right now, but I'm just going to say oil is on the downswing right now still. After his little pop up, it's come right back down. In fact, I should just bring that up so you can see it. Right? It's very jagged, but it's there. Let's see if I got something here that's good enough to try. Let's see if I can refresh this thing. Yeah, no, I'm going to leave it off screen because I'm still seeing a little too much noise on that screen. So I'm just going to leave that alone for a moment. Let's go now and take a quick look at CFWAF. We'll see you there. And, psychology is 99% of this, right? Well, really 80% of it. We've got to have the skill set, the knowledge of where the roads are paved, where there's street lights, where there's not. Okay, so oil, if it wants to keep coming down, I have no objection trying for a long, but quite frankly, I'm going to be hesitant to do so until we're back above the waterline from the drop bar. And we are looking at a 1-minute chart, right? If we're looking at a bigger time frame, the insight will be still there is a bias to long side trades. Okay, go back to the hourly chart. Is it still in a buy signal state? Is the blue line still sloping up? Yes. Is the triple S line back up into the uppermost quadrant? No. Okay, so wait. Go to the 5-minute chart, which is the chart that I'm trading. That's the signal on this chart is what I'm trading. And the signal is still a buy signal. There's your buy triangle. We're trying to get above the top of now a technically damaged. So George, you were asking before, and obviously we moved into technical damage after that a nasty bar. Above the top of the MSR channel here, 895, 905, somewhere in that area. There may be some long that could be alive, but I'm not counting on it, right? I know we're in a chop fest of a day. I had an idea that would be the likely outcome on the heels of a big 2 days in the market. But I'm going to be objective, right? We've come back to the center of the box. If we try to rise and breach the top of the box, get above the champion trend sell zone trail line here, get above the 950, 960-ish area, resistance still exists at 975. But after this, if we're making that attempt, I'll try to participate in it, but not here. Now, logically, there is a trade long above 900 to trade up to about 950. There's also a short side trade available. I think it's better below 850-ish down to the bottom of the box, 800. And Harsh, you're saying you like shorts at 907? If you got that on, good on you, my friend. Good on you. I'll consider it below 850 for me to play to the bottom of the box because I already got a piece of that short, right? On this particular bar right there. But the fact of the matter is the bias on the 1 hour chart, the backbone of momentum, is still sloped up. It's sloped up into a concrete ceiling, which we failed to break out above yesterday and so far have failed to break out above today. And it's also where we pretty much got whack-a-mole down, from that same area, that same territory. And it goes right back to the structure on the 4 hour chart. It's the champion trend sell zone trail line around the 975 area. You can see that on the right-hand scale with my horizontal crosshairs. And look, I'm not yet set on my outlook for the full week ahead. I do that research over the weekend. But at this stage, if we're not today able to really sustain above the water lines that I've communicated to you, there's downside risk into the beginning of the week then, right? So, when we started the session, I bring up the structural charts, I call them the plain clothes charts, the coil, right? And where that volume point of control is around the 29,820. If we're not able to sustain above that into the end of the day today, there is more downside risk Sunday night futures open into Monday morning. If we're able to sustain above it, it's not good enough. We would want to get above 30,000 and about 40 odd points, really where this volume profile node is right here, right there. So 30,000, about 40 points. That would keep the door open for a grind higher Sunday night. And then we'll have to evaluate more so whether or not, there's enough good news to support up and away. It's easier to buy things back when they're cheaper, quote unquote cheaper. So if there are more negative geopolitical headlines, ones that are more engineered, and exactly, AJ, exactly, right? Like if Trump cooks a bearish dish, and we get more bearish headlines and we end up coming down, my bet would be some point over the weekend, good news comes out and Sunday night's up. But it's going to be very hard to trade that on a swing basis. On an intraday basis, we just need to know where the landmarks are. 29,820, 30,040 points. That's the range that we're in, technically. Below 820, we've opened up range down to at least the mid 500s, which is where another volume profile node is. Okay, so back to the matter of trading this moment. I'm seeing the ES perk up a little bit. Good. The backbone of the trade on the NQ and the ES is still long on the hourly chart. 5-minute chart's in a buy signal. 1-minute chart is not entered a buy signal yet, but it's about to. You can see that green triangle flashing on as the triple S line is trying to cross through the center of the channel and above that slow momentum line. Let's just extend the box out a little bit further. We're back to above 29,900. And again, I keep repeating the same thing to make sure that you hear it in all different ways. We still have buy signals on the hourly charts. The hourly chart forecasts out the next 3 to 6 hours. We are embarking on, we do have buy signals on the 5-minute chart. The 5-minute chart forecasts out the next 20 to 90 minutes. When we get down to the ground on a 1-minute or sub-minute time frame, okay, it's really all about execution. So I know that the bias is up. I know that the ceiling needs to be broken for me to take on that upward bias and trade long. I know that we are in a sell signal state on a 1-minute chart, which is contrary to the buy signal on the 5-minute and the hour. And I know that we're at the center of the box. And I did a good short side trade over there a little while back. but it didn't follow through to the bottom. So as you know, some folks are picking short around the 900-ish area. I can't say that that's wrong. It's just not the highest probability moment for me to be in a position. Like, this is chop city. We're off the low. We've damaged the box. I'm not going to trust long until we're above the top. I can trust short more in the lower half of the box. But again, it's working against the signals on the 5-minute and the 1-hour chart. So, the highest probability decision is to take both hands under buttons and not make execution decisions until we're above the top of the box or below the bottom. And I think I've said that enough times, so I'll stop. Markets are manipulated. Politics are the instrument of market manipulation, in no uncertain terms. Right? Why does Pelosi have such a good track record in trading? You can look at other politicians as well. Why? Because they create the risk on, risk off issue. So, that's 007. That's a great question. I've been doing this for a while, and I like to do some math. So I've done lots of studies on an existing signal on a 5-minute chart. If we get a fresh signal on a 5-minute chart, what is the time span on average across most risk-on asset classes for it for that signal to be valid? And I'm not going to say it universally works all the time. And you can see it's a wide range. 20 to 90 minutes is not a small range in time, right? Between 20 and 90. But I quote it to you that way because that's the statistical signal worthiness time frame from a fresh signal on a 5-minute chart. So we had a down signal at 10:32 a.m. Eastern time. We're 20 minutes in, and we're still working off of that down signal. This is on a 1-minute chart, though. Okay. On a 5-minute chart, we're in a buy signal. The buy signal was installed right over there. What was that? 10:35. We're still not below the lows of the bar for the buy signal, but now we're getting a conversion, right? So we had 15 minutes of that buy signal working. Okay, it worked a little bit at the front end of this bar, but now it's eroding. So let's see if that short's becoming more of a reality at this moment. And Harsh, are you still in your short, or did you end up bugging out? Because I'm thinking of taking mine now below 850, like I was communicating earlier. And it's very opportunistic. You are? Well, good on you. If we don't breach 850, though, it's going to chop right back up to 900, 910. And remember, the bias on the hourly chart is still up. The 5-minute chart is potentially changing now, right? We're in a tentative sell signal state. So I can support the short on the 1-minute, executing the short below 850, because at least on a tentative basis, I've got a sell signal on the 5-minute chart, which is my day tradable chart. It's contrary to the signal on the hourly chart, but it is what it is. I've tried it. I think I got in a little earlier than I wanted to, but I've executed. So I'm in a short now. I think I got in at around 850-ish, maybe 851-ish. And I'm not beholden to this, right? If it works, it works. If it doesn't, I bug out above the bottom lip of the channel. I'm not going to let it get away from me. So I'm waiting to see if we get the follow through now back to the bottom of the box. The good news is the 5-minute chart and the 1-minute chart have their signals aligned, right? We've got a confirmed sell signal now on the 5-minute chart. And there it is. There it is. There it is. Let's see if we can breach all. This should be breakdown to the bottom of the box time, right? There is obviously support right around 830, 820. We know that's the water line. So if this does not progress quickly, I'll take my profit. But I want to see a slice right through that 820 marker down to 800, and I'm not getting enough yet. So my finger's on the trigger to get out of the way. But the position's been enforced for a minute now. It's profit positive. I'm taking profit. Thank you very much. Someone else can take it down to the bottom of the box, break the bottom of the box, and I will join the trade again. And you might be asking yourself, well, is this really the bottom of the box? Well, yeah, it was established at the beginning of the day. We've damaged it dramatically. We don't really have enough oscillations in the full range to make this a proper box. We've actually got more falling tops, but here it is again now. As we come into the end of the time that I'm going to be trading with you this morning, I'm going to still look for trades from 11 a.m. onwards, but we'll take a bit of a break probably. If we're going to break the bottom of the box, 800 now, I'm going to try to execute a trade on the breach of the bottom of the box. We are below the 820 marker. We're at 812, 813, 815. But I do need to see the bottom of the box breached. I've got my triple S sell signal state in force now with oscillating signals for the short. I've got the double red dots. Let's see if we've got enough force to keep going down now from where we are at this moment. I'm just going to pull up oil again on another screen for myself and take a quick look, see at how that's going. Did anyone else get the short with Harsh and me? That last little short, whether you took it from 900 or you took it under 850, feel free to share if you want to. You don't need to. If you're focused on a trade, please do not take your eye off that ball to respond. Oh, wow. Lots of folks got it. Amazing. Happy for you, Jean-Paul. That's amazing. And look, it was a good idea to take profit while I had it on the short below 850. It's still in a sell signal state on a 1-minute chart and on a 5-minute chart at this moment. We've breached the bottom of the MSR channel. There's technical damage here, which means signals we've got the inside of the channel going from green to magenta. It means the effectiveness of technicals is a little lower. So it can whipsaw. It can do things that are contraindicated. But here we go. Let's see if this is going to be the breakdown. Now it's right into the last minute of the hour. So be very careful. I think I'm going to sit it out, but it could end up being a great trade below 29,800. And it's also the area where we've got that volume point of control for the NASDAQ, which you've heard me say, ad infinitum. 29,820 is the water line. We're at it right now, dipping our toes into the water. Is it warm enough for us to dive in? Let's see. I'm very tempted. And exactly, right? 007, I agree, right? That's why I'm like, I'm probably going to sit it out, let the hour conversion happen, and then make the decision there. But what I'm hopeful of is that folks, we're able to see that it is possible to even recover after something that comes out of the blue. I pretty much have. Okay, so as we're waiting for the hour to change right now, the questions that we should be asking ourselves is, has the signal set up changed dramatically enough to just make this a downtrend day, or are we just going to hold support at the bottom of the box and bounce? So ours changed. We're coming down to the bottom of the box. Let's see if we breach it. I do want to try a trade below 800, so I'm going to try it. It should open the door for a move down towards the lows that we saw here. If we come back up above even 810, 815, I'm going to have to get out of the way of the trade. And we're at what, 812, 815? I'm going to get out of the way. Okay. If my entry moment does not result in profit and staying profit positive from the moment of entry, I've probably chosen the wrong entry moment. It may still end up working. And in this case, it can, but I know myself, if I've done the work right and I pick the moment right, it goes profit positive and usually stays profit positive. Otherwise, the entry is probably wrong. Now, that's something that I know about my own self and my own style. So now comes another attempt to come and break down below it, but I'm obviously not going to be able to take it until we come down below the low of the last closed 1 minute bar. If it's chipping away at this floor that's made of cardboard, it should just whoosh down. It didn't. It had the opportunity to whoosh down on the last 1 minute bar. It reversed back up. I got out of the way because the behavior was not consistent with this floor being made of cardboard at 800. If it was a concrete floor or a springboard, it's firmer than a cardboard floor from what it seems, but it's certainly not acting like a springboard, not yet at least. And what we're going to do is we're probably going to take a little pause, have a minute or two, give folks a little bio break, and then continuing from there, right? Exactly, Tony. And that the whole point, my recovery was helped, as you're writing, by single contract micro trading rather than the full contract size. Why? We know that we're in a choppy day. We know we're in a market that has got lots of potential to be indecisive on the day after a big move up that we've seen, almost 4% or thereabouts on the Nasdaq from the lows 2 days ago to the highs yesterday. Typically after that kind of an expansive move, you've used up the rocket fuel, and it's less likely that we're going to have a trend day. It's more likely that we're going to have an indecision day, right? Which are statements that I made right up front before we started trading. And so far that has held true. So that's the part where a little bit about the neighborhood that we're in. And speaking of the neighborhood that we're in, you go back to the daily chart, okay, and you get the big picture under your belt over here, and you go, what is this process overall, right? Since the beginning of May, is this a topping process, or is this a bullish consolidation zone readying for continuation higher? So the tipping point is going to really only be known if we come down roughly 2 or slightly below the lows from June 9th, 10th, 11th, or above the highs, from middle of June. So the idea over here is we're caught in this range, this big range in the market, and it is a range, right? We had our trend up, established roughly the bottom of the range here, mid-May, established the top of the range effectively here on the second test. We really established the bottom of the range when we came down again, middle of June here, or June 9th, 10th, 11th, validating that there's some support in this area. And we validated that resistance is resistance. So, broad strokes, 30,700, top of the range, 28,700, bottom of the range, 30,700, 28,700, 2,000 point range. And we're halfway in the range right now at 29,800. Well, 800 right now. So if I look at the big picture here, I'm not in a market that I know clearly can consistently trend without too many issues, right? It is stuck in an area where there's probably going to be issues, and those issues are exacerbated by geopolitical headlines, and then we're running into earnings. So if earnings ends up coming out and giving us something good, great. We are breaching the bottom of the box again, folks. I'm trying to take on a trade for follow through. I'm seeing acceleration, but I make no bones about it. It could very easily whipsaw right back up. And if it does, I'm not interested in staying, but I'm willing to, stay in the position for a little bit right now. If we come back up and I end up seeing action that gets us back well into the box, like 810, I have to take my hit on it and get out of the way. Or I could choose to hold on the basis that the sell signal is still intact and we're still below speed lines and I'm getting the double red dots, but I have no interest in staying in this position at this stage. So the journey on the day has been a tradable range, yes. Big upset in the middle of the range. Some benefited from it. Some got hurt by it. The potential to recover was there. We are now in a state where the hourly chart, triple S indicator, has moved from that triple S line, trying to hold on to the uppermost quadrant. It has now come down into the third quadrant, and it's crossed below that fast momentum line. So that's strike two. Strike one, it wasn't able to hold the uppermost quadrant. Strike two, it's come down below the fast momentum line. Strike three is if it breaches below the slow momentum line. And that would probably require a drop, that's considerable, 100, 150 points or more. So at this stage, for those that are thinking that the whole thing rolls over, it very well can. Just don't expect consistent downtrending action. Don't expect consistent uptrending action in a market that's out of gas, that is literally deer in headlights, right? We had an opportunity again. I tried it again. Didn't work for me there. I got out of the way, saved myself a whole bunch of pain. And there it is, right? It's trying to build a base to potentially get back up to the center of the box right now. Oil is coming down. That is one of the key things that I'm seeing on my other screen here. I'll bring that up on your screen as well. Let me just show you that. I just have it I don't have it on a second or that type of chart. I have it just on a 5-minute chart, more relaxed, and very clearly oil has come down. After that massive spike up, it imploded back, okay? And it was not able to really eat into the wick of that 5-minute bar, and is now coming down. And the market's bouncing back up, right? And Jim B, you asked the white rectangles, meaning right here. It's just a way to outline the range that we're in and add to some of the decision-making parameters. If we break the bottom of the box, it's about short. If we break the top of the box, it's about long. For bouncing off the bottom of the box with oil coming up, there's a long available, yes, and the better long is above a volume profile node, which we are going to get more clearly defined in a second here. I just need to bring that out into the future. So right above 875, there is potentially a long. From there up to the top of the box, it's also a ceiling of resistance. So is the falling channel. So I'll zoom in on that a little bit. All I've done is I put a volume profile histogram on the screen on top of the indications. Right, I'll just make this full screen right now, so it's easier to digest fully. And all I've done over here is said, hey, since the start of the day, okay, we've established a pattern, operating within a structure, i.e. a box, and it's held, okay. Even though damage has happened, it's clearly held. So this is an area where a lot of contracts exchange hands. The most contracts exchange hands up here at 945. This is like the second most traded price line, and it's sitting effectively at what, 870, 875, and we're trying to rise up to it. If we get through it, it's not smooth sailing, but we are probably going to get pushed up to the next node. So above 75, then there's 95. Above 95, then there's 926. So above 895, there's a 926. Above 926, there's the volume point of control for the since cash hour started, sitting at around 945. And this is one of those days where if one wants to look for the range bound trade to continue, it probably will. We'll probably try to come up to the top of the box, fail to break it. So at this stage, I decided not to pause for a break. And Peter L., you can write in to ask about that question. You too, George. We'll see you in the following week, of course. We'll see you at the summit as well. And Jamie J., you've asked, can you list all of the indicators I use? Absolutely. It would be my pleasure to do that. Well, we'll start with what I'm using, what I use here to begin with, because I use a lot of tools because I teach many different methods and styles to folks that use different sets of indications that they've got, or ones that come with your Wealth Charts membership. So what I'll do is I'll just make this full screen and just hit that little plus button over here. And you can see that I've got the champion, and we'll leave the histogram on. The champion trend indicator is that plaque with a trail line. It's one of the foundational 5 indications of 4 wealth charters for the Champion Trend Pack Toolkit. So the CTP Toolkit, Champion Trend Pack Toolkit, developed by Rob Hoffman. He's the only one that we know of that's won 37 real money international domestic trading competitions. And this is his toolkit. So the Champion Trend Pack has 5 indications in it. The Champion Trend Indicator is what I'm highlighting right now. Once that fires off, and it fired off on the sell side up here, right? Once that fires off, we want to look for the Champion Cross. The Champion Cross is that little red or green opaque zone on chart, and it's the dot at the bottom of the main chart. So technically right there, we went into a sell signal state. And right here, I was looking at a long, and we got whack-a-mole, right? We were transitioning, trying to breach the top of the box, but we had not gotten above the sell zone trail line, right? So I took on a risky trade at that moment, and unfortunately, the geopolitical headline came out and whack-a-mole me down, and then I recovered. Now, the idea, the next indication that's part of the Champion Trend Pack Toolkit is the wealth signal, which is an orange ball. So if you're already starting a sequence, like a sell sequence here, the Champion Trend Indicator has to be there. Champion Cross, that opaque red zone has to be there with the dot. Once they're there on the last closed bar, you're in stage 1 of a sequence, in this case, a sell sequence. Stage 2 of the sequence is remarked by wealth signal. It can also be remarked by range breaker. But usually when you're converting from a buy sequence to a sell sequence, it's wealth signal that will come in. And what does that signal to you? It signals to you that there's more of the trend in front of you than behind you. Okay, there's more of the trend in that direction, in that sequence, in front of you than behind you. So that's stage 2 of the sequence. Stage 3 of the sequence is the really excitable phase. It's where we get these dashes above the, in a sell sequence, it'll be a red dash, as you can see, above the bar, which means you're likely going to have, you're in stage 3 of a sequence, and there's only 3 stages. So you're in the completion phase of that, but it's a very excitable phase where you can make bigger moves with less bars. So right now, what are we dealing with? And we're looking at a 1-minute chart right now, right? We're seeing that little green dot appear. So the Champion Cross Indicator is starting to convert and cross over from red to green. A little harder to see, but you kind of get a sense of it there. And that green dot is there now. The Champion Trend Indicator is still in a sell state, right? We'd have to breach the Champion Trend Sell Zone trail line. And we're trying to breach the volume profile node that I communicated to you around the 870, 875. So if I use these 2 things together, which is volume profile and the Champion Trend Pack Toolkit, not ready for a long yet. Get above 895, probably better decision to take the long above there from here, right? If one traded it on the bottom of the box, you're trading a risk reversal. Okay, we've hit a ceiling. We haven't breached it yet. But I'm not in a buy sequence right now. I'm seeing the toolkit tell me we're evacuating a sell sequence, right? What else do I have on screen? I've got Rob's speed lines on screen. These are very fast acting kind of moving averages. There's a blue one or a cyan one, and there's a magenta one. The former is the fast speed line. The latter, or the magenta one, is the slow speed line. Right? And speed line crossovers are also a trading tactic, right? There was a bullish speed line cross that happened right there. And now we're seeing the air in between the speed lines compress. Okay, let me just highlight them again. We're seeing the air in between the speed lines compress. If we end up seeing the fast speed line go below the slow, this move might not continue, but it's not happened. We had a little scare, and it's now tearing back up, and it's trying to breach the Champion Trend Sell Zone trail line. You can see the buy zone coming in. You're also seeing this triangle on screen right now. What's that triangle? That triangle represents a buy signal. It's tentative because it's on the current live bar from the triple S indicator. And the triple S indicator, once we've got a buy signal, okay, we want to know that we're aligned with the direction of the channel, which is Rob's MSR channel. Let me see if I can highlight that. I've got it set up as the technical damage channel. It is sloping up. Okay, we are in a buy sequence, buy signal tentatively, and we're trying to now, and we breached the Champion Trend Sell Zone. And I'm kicking myself that I'm not already in a long. I can still try it from where it is right now. It's not the optimal entry, but I can still try it and trade it up to about 926. If it breaches 926, I can trade it again up to 946. trade's profit positive, which is good. And, I'm going to take my profit. I'm taking my profit. So as we approach the top of the box, there should be hesitation. And what other tools? I've got volume highlighted at the bottom of the screen, bottom of the main chart. And when I'm looking at volume, if there's a breakout or a breakdown or a turnaround, I'm looking for an outsized bar to present, right? I'm looking for an outsized bar to present on volume. So right now we're at the precipice of breaking out, right? So I'll look at volume as well to see if I've got a bigger bar than average. And the case is it is slightly above average. So you've got an idea now of what I'm working with. Now in the subchart is the actual triple S indicator. And I've had a bullish cross happen. That's where that triangle came in. And I've moved from the lower half of the channel into the upper half of the channel. So this is a bullish event on a 1 minute chart. The 1 minute chart again is not the chart that I'm actually trading. I'm trading the signal on the 5 minute chart. The signal on the 5 minute chart has tentatively moved into a triple S buy where I've got the green triangle on screen. Okay, but this bar has got another half of its life. This 5 minute bar has got another half of its life left to live. And I'm looking at the subchart at the same time and I'm going, where is this buy signal happening? It's happening in the uppermost quadrant of this 4-quadrant channel. The better buy signals happen in the bottom of the channel. I don't have a great example in recent history here because we've got a downward sloping channel, but that would have been perhaps a better example of a buy sequence. And you can see the result, right? You can see the result right there from that green triangle right there. When you get buy signals in the uppermost quadrant, they are stressed buy signals. They are less likely going to follow through and trend. They'll pop you up to the next resistive structure, and then we're going to probably end up facing resistance and coming down. So I already took my profit on that last trade, and I already had the knowledge that the situation that we're in right now is not a situation where I know there's going to be trendability. I know we're in a day where we're likely going to be in a chop fest. I know we're in a day where we don't have as much gas in the tank, and now we've got damage done. So I've now brought the volume profile histogram out further, and now the volume point of control is moved to this area, which is around the 29,875 area, which is where I was talking you through long side trades, right? And then I took one a little late above the champion trend sell zone trail line. So this is now the most important line in the box. It happens to also be near the center of the box. The top of the box is the obvious, right? We just came up to it. We tried to, we perforated it. We tried to break out above it. It hasn't happened. And again, I'm using the confluence of all the tools on different time frames to provide you with the insight. And the insight is, hey, you're likely going to be in a range-bound market, an indecisive market rather than the trending market. So range trading dynamics have to come into play. And that's what I've been trying to help with. And at this stage, if one wants to short it, you're not going to have all your signals turning back to sell, even down to a 1 minute chart. They're not all going to convert over. But you can use the tactic of the speed line crossover as a backing for a sell. But remember, you're doing it against the current buy signal state that we're in. So in a range, I tend to like to take the trades through the cross of the center of the range, not at the top for a short, not at the bottom for a long. But as we breach the center of the range, I have a higher probability for follow through. If we come back down and come down below 875, I want to be short down to the bottom of the box, right? And if we bounce again off the bottom and come back up through it, I'm going to want to be long. If we break out above the top of the box, I'd like to see it happen on above average volume. We had one bar with above average volume, this 1 minute bar right there, but it did not sustain above the top of the box. I took my profit on that last long, and that's it. I have it on another screen, Stephen E. So I have it on another screen, right? I'm working off of a bank of 3 high, 6 monitors at this stage. So I'm constantly looking at it, and I'm doing things on other screens too. All right. So I haven't paid as much attention to the chat. This is the time where we do the review, and I've done a bit of that already. So I want you to know that if you've asked a question, I've missed it. The chat flies by so fast. Feel free to put it in again, but I'll try to scrape through it as it's happening right now. Yes, Gus, all the monitors are on one PC, and it's just a video card, right? A video card that has outputs. And my PC is actually a little older now. It's actually would be considered old. It's a few years old. So the technology has improved dramatically. My kiddo was, on me for quite some time to, build a supercomputer. He wanted to build a supercomputer for himself. He has. He's good at that stuff, actually. So I'm going to actually get him to build me another machine in the near future. I'm looking forward to that. All right. So let's see. I see some questions coming back into the chat. Is it possible to download your layouts on wealth charts? You don't need to download them. They're actually there for you. So you can actually just go right to the hamburger menu right here. And I'll put some layout codes up in front of you as well. So layout code. Okay. I'll put that in front of you in a second. But you can go to the hamburger menu. You can go to where layouts are on wealth charts. Go down to where it says premium layouts. And you click on that. You're welcome, Belana. Nice to see you here again. The premium layout section, just scroll down and you'll see my day trade swing and day layout, my triple S layout in there. If you want the native wealth charts layout that has the indications that I think it was Jamie that asked the question. I'm going to put that layout code up. I'll just put it on screen so you can take a screen cap of it. I'll try to put it in the chat too. Let me go find it for you. Yeah, I found it. So I'll put it in there. I'll put it in the chats right now. Okay, and the one that I put into the chat now has got the champion trend pack, which I signify with CTP, and WCX, which is wealth charts exclusive tools. So that's in there for you as well. So you can easily import it. You can copy that code out of the chat. You can go over to the hamburger menu. You can go over to the layout drop down, and then you can go over to import layout. And when you click on that, a little box will pop up right over there. And off you go. You can import it and save it and make it your own. So there it is. All right. Well, folks, we're coming into the end of our time together this market morning. I hope you made it out alive from this market morning. I hope the insights in advance of the market move was helpful to you to let you know that we're probably going to be in a chop day. It's probably going to be indecision. I think I alluded to that yesterday as well at the end of our session. It is certainly been that today with some geopolitical spice added in, which certainly can make things challenging. Now we are in a market where if you look at the big picture over here, I want to end with the big picture insight rather than day trading insight. So I'm going to pop up my as I call them, the plain clothes charts, which are charts that have volume profile, pivot levels on it. And we've got a little history, and we're going to look at them on a daily time frame. So the S&P E-minis, they have done better than the NASDAQ. We have pushed out. We've come up to, you heard me say it, in the pre-market, above 75.95. We're probably going to see 76.05 to 76.15. Okay, so we've come up and made a high of 76.05 and 3 ticks. So correct insight. What does this mean for the week in front of us? Well, it really is about the NASDAQ to signal that. So this is good, okay? But what we need is the NASDAQ to be above key lines and levels to support upside. If we remain above the danger line, which we're above right now, we're well above it, right? 820, 29,820. If we remain above that into the end of the day today, that's a good thing. It's not as high probability that we'll still go up on Sunday night, but if we are able to get a hold of 30,040 points and actually close above there, the likelihood on Sunday night is a continuation up. Okay, and then we'll have to evaluate whether or not that intersects with good enough news Monday morning for follow through. However, if we come back down below 29,820, the Nasdaq is singularly the better signaler and provider of outlook for direction. Below that 820 marker, if that happens later on today, we are probably going to come down at minimum into the low 29,500s. Right? There's a 300-point risk range to the downside below 820, and above 820. There's about a 250 risk range, 220 point risk range to the upside, where we probably would top out around 30,000 and about 40 points. And there you have it, folks. I hope you've enjoyed your time with me and all of us today. Let me know by putting a lucky number 7 in the chat if it was useful for you today. And we can go from there. And I will see you back. Well, next week, we're not going to be doing sessions. So announcement. Next week, we're going to be doing the Wealth 365 Summit. So I'm not going to be doing these morning sessions or midday sessions on wealth charts next week. We're going to be at the summit. I'll be presenting on Monday around similar time, I think around 11 a.m. Eastern time. So, make sure to get your seat. And it is the biggest summit that we've organized so far in history. And it's a historic event giving away over 1,000 prop eval accounts from a variety of our partners, our prop trading partners out there. So certainly looking forward to seeing you there. There's going to be a week-long trading challenge with prizes on the back end of that as well. So it's an extraordinarily exciting time for traders of all sorts to be able to gain some insight, have some excitement, some inspiration, learn some incredible strategies from great traders, including Rob Hoffman himself. And I look forward to seeing you there, folks. Folks, thank you for being here. Thank you for taking the time. Thanks for all of the questions and the engagement. The challenge begins on Monday, I think midday. I think it's going to start. I think it's going to be with Rob kicking off the presentation that he's doing on Monday. So check out the schedule. You can go to, just go to joinziad.com, get yourself registered. You'll get emailed all of the stuff, but you can also go to the Wealth 365 site there and get that insight. But it'll start probably midday on Monday. All right, folks. That takes me to the end of the time that I have available here with you for this session. Stay tuned for more. It's coming up shortly. I look forward to being with you at the summit next week. And we'll be back on the horse for these types of sessions the week after next, of course. And I've given you my forward-looking remarks. I hope that they're useful for you. We're coming up above 975 right now on the NQ. We're probably going to try to make a move up to 30,040 points. It's probably not going to happen in one move. But the attempt is on as we speak. We're attempting to break the 4-hour chart resistance structure right now, that 975 marker. We're at 974 right now. So exciting moment for potential continuation higher. Just don't have hopium driving your decision-making here. This is a day that's still coming on the heels of a very expansive move. And if we fall back into the range, it would be absolutely normal. All right, folks. And John, I don't know when that's going to happen, John G. But that would certainly be a fun day. And we'll see if that can happen in the near future. All right, folks. I'm going to sign out now. Have a wonderful rest of your day today. We'll see you on the flip side, and we'll see you at the summit next week. Bye for now, all.